Hey, real quick, did you know that right now, as you're watching this, countries around the world are quietly dumping the US dollar? Not loudly, not in the news, quietly. And here's the part that should genuinely concern you. It's already working. The dollar has been the most powerful currency on earth for over 80 years. Every oil deal, every trade route, every global transaction, it all runs on dollars. But something cracked. And once you see it, you can't unsee it. So let's talk about what's actually happening. Because this affects every single person on this planet, whether you own dollars or not.
The US dollar, the most powerful currency on the planet. For decades, it has ruled global finance. Oil is priced in it. Debt is denominated in it. Countries hold it as their savings. Businesses around the world won't move without it. But something is changing. Right now, quietly, carefully, away from the headlines, the world is beginning to move away from the dollar. And the most shocking part, most people have absolutely no idea it's already happening. To understand what's shifting, you first need to understand just how dominant the dollar really is. After World War II, the world needed a stable anchor, a single currency that every nation could trust. And the United States, coming out of the war as the strongest economic power on earth, gave the world exactly that. The dollar became the world's reserve currency. What does that mean? It means when Japan wants to buy oil from Saudi Arabia, they don't pay in yen or reals. They pay in dollars. When Vietnam imports electronics from Germany, the transaction clears in dollars. When a country wants to protect its economy from collapse, it stockpiles dollars. Around 60% of global foreign exchange reserves are held in US dollars. Nearly 90% of all global currency trades involve the dollar on one side. The dollar isn't just America's currency. For all practical purposes, it's the world's currency. But that status? It's under quiet, growing, relentless pressure. Here's where things get interesting. Over the last few years, something has quietly started to move. Countries that used to settle all their trade in dollars are now making deals in their own currencies. India and Russia trading in rupees and rubles. China and Brazil settling in yuan. The Gulf states quietly exploring alternatives. Central banks, the institutions that manage entire national economies, are buying gold at the fastest pace in over 50 years. Not dollars, gold. The dollar's share of global reserves has been slowly declining for 2 decades. It's not a crash, it's a drift. Subtle, steady, deliberate. This isn't panic. This isn't a crisis headline. This is a quiet structural shift. Countries, one by one, deciding they want a little less exposure to the dollar. The question is, why now? What changed? There are 3 reasons, and each one is more unsettling than the last. Reason 1, the sanctions weapon. When Russia invaded Ukraine, the United States and its allies did something unprecedented. They froze Russia's dollar reserves, roughly $300 billion, overnight. Just gone. Inaccessible. That sent a shockwave through every government on Earth. Because every country suddenly realized the same thing. If we hold our wealth in dollars, and we ever cross Washington, they can take it. That's not a theoretical risk anymore. It happened, in real time, on live television. And countries, especially those with complicated relationships with the US, quietly began looking for the exit. Reason 2, money printing. During COVID, the United States printed trillions of dollars to keep the economy alive. Trillions. The money supply expanded at a speed the world had never seen in peacetime. When you print that much money, every dollar already in existence becomes slightly less valuable. And the countries holding hundreds of billions of those dollars? They watch their reserves quietly erode. Reason 3, trust. This one is harder to measure, but it might be the most important. The dollar's power was never just about economics. It was about faith. The world trusted that America would manage the dollar responsibly, that it would honor its debts, that it would keep the system stable. That trust isn't gone, but it's been tested, repeatedly. And when the world's reserve currency becomes a political tool, when it can be used as a weapon, inflated at will, or caught in partisan gridlock, people start asking a dangerous question. Is there a better option? and some very powerful players are already answering that question. China has been building an alternative financial system for years. The yuan's share of global trade finance is growing. They've launched cross-border payment systems that bypass the dollar entirely, and they're settling more and more of their energy imports, the lifeblood of their economy, directly in yuan. Russia, after being cut off from the Western financial system, has been forced to accelerate de-dollarization faster than almost any nation in history. Their trade with China, India, and the Middle East now flows almost entirely outside the dollar system. And then there's BRICS: Brazil, Russia, India, China, South Africa, and now a growing list of new members including Saudi Arabia, Egypt, and Iran. Together, they represent over 40% of the world's population and a significant share of global GDP. They've been discussing, openly, the idea of a new shared currency or trade settlement mechanism that reduces dependence on the dollar. Now, this doesn't mean it's going to happen next week or next year. Building an alternative to a system the dollar has dominated for 80 years is enormously complex. But the fact that the conversation is even happening at the highest levels of global finance tells you something important has already shifted. So what happens if this continues? What does a world with a weaker dollar actually look like? First, and most immediately, Americans feel it in their wallets. A weaker dollar means imports get more expensive. That means higher prices on electronics, cars, clothing, food. The cost of living goes up, and there's very little any government can do to stop it. Second, the United States loses something far more valuable than just purchasing power. It loses what economists call exorbitant privilege, the unique ability to borrow cheaply, print money, and run deficits that would destroy any other country. That privilege has funded America's military, its social programs, its global influence for decades. Take that away and the entire economic model has to change. Third, and this is where it gets truly uncertain, we could be entering a world of financial fragmentation, multiple competing currency blocks, separate payment systems, a less connected, less stable global economy. Gold prices could rise significantly as the world seeks assets that no government can print or freeze. Commodity prices could become more volatile. Emerging markets could face severe disruptions. This isn't guaranteed. Transitions of this magnitude take decades, and they're rarely clean or linear. But the direction of travel, that is becoming clearer every year. Thank you for watching. Meet in the next video.